Hey guys, Brian Stevens here with the National Real Estate Post. I have Chris Martin, my great friend and partner in crime with Oak Tree, and we're going to have a conversation today about, are we in a housing bubble? So Chris said to me a couple of days ago, he goes, you're totally wrong about this whole thing. And I said, let's have a conversation.
Right.
So are we in a housing bubble or not, Chris?
Not to the extent that people think.
Okay.
Your words were, I can't remember exactly what they were, but I just watched your video and you're like, there's big to come. You think that 2008 was bad. Okay, look out for what's coming next.
Okay.
Something like that.
No. That's exactly what I think is going to happen. I think this year is going to make 2008 look kind of crazy. I really do.
Really?
I mean, kind of.
The people that are holding a lot of properties, right? And I say people, they're companies, they're organizations, the BlackRocks of the world, Goldman Sachs, these big funds. Those guys are holding on to a lot of houses, but they bought them leveraged and they're on repo lines for the most part. So they're, as they need to have margin calls as values are dropping and those types of things, that they're holding on to them. They're not in a space where they need to really rush to sell a bunch of those assets. Nothing's happened. They're still collecting rent. They're still making money. Those properties are still cash flowing. So that's a big holder of like whereas before it was like everybody and their grandma was out buying investment properties with no money down. And then when they stopped cash flowing, they stopped paying for them, right? So, the loans that we've been doing, even since 2018, 19, 2017, whenever DSCRs came out, we've been doing these investment properties and they call them stated income, but we've been qualifying them based on the subject income of the property. And remember, we're doing interest only loans. So they have 10 years at the super low note rate. Rents aren't going down. Why aren't rents going down? Well, you said it later on in your meeting too. There's no inventory. There's like, I mean, I think in Arizona, there's like 20,000 homes on the MLS. Why is there no inventory? Well, because people, have these super low interest rates. So unless you had to move, like you had a specific reason you had to move, what's pushing somebody to move? Why would you sell? Okay, I'm going to go sell my house. I'm going to collect a check because I'm still getting a pretty high market values. Even if my house is 10% off the high, which is still 30% higher than it was before the pandemic, why would I take that profit right now? I have to be in the house a couple of years and we have a huge tax bill if I do that. The other reason is that where are you going to go? You're going to go move to an apartment and pay 3 times your payment that you're paying for your housing right now? Why would you do that? I think if you're going to do that, you'd already done it.
Yeah, I mean, I'm going to argue against myself right now. I just looked up the St. Louis Fed today, Fred, and I was looking at home prices and they've gone up exponentially over the past 65 years. I mean, it's been nothing other than just a bloodbath of opportunity for people who want to make money. So it's really good. But in the short term, I got to ask you this though, when we kind of look at where we're going right now, I mean, we see that our foreclosures are going through the roof. They're low, but they're still higher than they've been in the past. And we look at, Fred also coming out and talking about a 20% fire sale on houses in values. I mean, then how do you respond to that?
20% from what though? 20% from the market high? I mean, how long was that there for? It was like a month or two, and then we started to see higher interest rates, and that started to trail off almost immediately. So, I mean, I don't know. I don't see. I'm not. No, I look at the data that comes across my desk, right? I don't do a whole lot of research. That's what we got you guys for. We in our other resources, but I mean, we have. What we've seen is some values are declining. We had an appraisal done 6 months ago. And we had to do a refi on a place in Maricopa County, and it came back $8,000 less. We have not seen that because we just don't see. I just don't. The formula isn't there. It's the same thing that would happen when COVID hit, and everyone was like, "Oh man, these non-QM loans, they're going to be the death of us. That's horrible." Blah blah blah. First of all, non-QM is such a small segment of the business compared to what subprime was back in the day. That's not the same. That's not the same formula. The next issue,
I agree.
Is
you're right.
They're underwritten differently. So that's not even a problem. So you're talking about FHA loans. You're talking about, for the most part, conventional loans that have stronger credit, have ability to repay requirements. They have a lot more things in them. Are there going to be more foreclosures? Absolutely. People have lost their jobs. Look at how many companies have been laying off. How many people? And I bet a high percentage of those people who have are foreclosing are people in our business set, right? Real
Yeah.
estate professionals, real estate agents, loan officers. We had a deal that we had a early payment default issue, and it was a loan officer. And it was like, oh, well, my business is down. Okay, well, you still qualified. You made him, Anyway, I mean, there have been some issues here and there, but by and large, who I will, my rates, high twos. I'm gonna not. Where am I gonna go move? Right? If I can't make my payment, where am I gonna move to?
Nowhere.
I'm gonna have the same amount of square footage, and I still have a family, and the payment I have right now based on that interest rate. If you have a 2.875 rate, my father-in-law has a 3.25 interest rate. If you have those types of rates, your payment is so low unless you're forced to sell for some reason, lost a job, transfer a job, death in the family, whatever, something happens, it forces tax bill, whatever, it forces you to sell, then yes, there's going to be a home in the market that you could potentially list for less. But otherwise, what is the big driving force? Before, the big driving force, the reason why 2008 happened was, listen, my house, I had a house foreclosure on this side, I had a house foreclosure on this side, a house foreclosure right here, a house foreclosure right here. And these people were in a bankruptcy. So I had all of this depressing things happening in my neighborhood all around me, that these houses are all now, they're worth zero because no one's willing to buy them, right? The bank's like, oh, we'll take it. You're trying to settle, you're trying to do all these different types of things, short sale, whatever you can do to get those down. That's not right now. That's not. I don't think it's coming either. I just don't see. You had stated income loans, no money down, rapid acceleration of cash as your ATM, no qualifications. I think that the lending practices, and I would probably kick my 10-year older self would kick my today self for saying this. But I think that the regulations that were put into place specifically around the ability to repay and the lenders' prudence in making sure people put more money down on homes when they were higher risk situations will prevent will prevent a 2008 from happening again. I don't say it will never happen again. I'm just saying this isn't it. This is the next.
It certainly is in the world. I was just having this conversation with my daughter, my 15-year-old daughter, and we were talking about like what was going on in Detroit, where people were like burning down houses to the right and the left of them because they didn't want people who were going to be squatting in those houses, and like all the bad stuff that came with it. Like, we are so not there. We have like the greatest book of business that we've ever written right now. And our non-QM loans, I mean, this is kind of the big one, Chris. Like, we want to let people know, like, the non-QM loans that are being written right now are the stablest loans ever, because they all have ATR on them. Like, everything that you guys are writing right now is a quality loan. Like, there's no bad loans. Functionally, it's really interesting for people to find out that like your non-QM loans almost have higher credit scores. I mean, your average credit score is what, it's 725? What is it?
730. And when we were doing even agency and government lending before 2014, our average FICO score is like 696 or 688 or something like that. And we were doing agency loans, which are supposed to be prime A plus credit.
Right.
And you might say, well, they changed the calculations of credit scores and stuff, and generally people's credit scores got higher. But I mean, our weighted average loan to value is 73%. Our weighted average FICO score is like 730 plus. Our DTIs are less than 30. And by the way, the majority of the loans we do are bank statement loans. So when we're qualifying somebody on their bank statements, we're looking at their net income. We're not looking at their gross income. So they're 30% DTI on their net income. They're not, so if you gross that up, it'd be more like, like 10%.
Right.
I mean, so these are well-qualified buyers. And like I said, the house has to pencil, like you mentioned 100 times. And as we talked about how to sell and how to structure these DSCR programs, you're right. There's no income and there's no reserves, because we look to make sure the property cash flows. The next big thing that you're going to see with other non-QM lenders, one of the things that they're changing, is that a lot of them went to this Air DNA, and they were using Air DNA to qualify their borrowers if they said it was a short-term rental house. and they were doing, Airbnb, and we've never allowed that per se. We have used it as a tool to verify. But if somebody wants to do a short-term rental with us, it, either the appraiser denotes that it's a short-term rental, and they
Right.
use AirDNA as one of their sources, not the only, but one of their sources to pull comps, and they actually enter it into the appraisal report themselves. Or we get a 12-month pay history from the client showing, hey, this is how much I've rented it out for the last 12 months. And then we make a decision on how we're going to allow for that income to see if it's going to pencil from a DSCR perspective. A lot of people you're going to see start doing that because they've just were taking these AirDNA, which, AirDNA original use was for partners of Airbnb to go in and see how much their house could rent for. So they're almost geared towards showing a higher rental income on that property, just
Right.
because that's what they're there for. Is they're there to show, hey, if you rented your house on Airbnb, this is how much you could make. And if it was a lower number, then they're not going to get as many people to put their place on Airbnb or the other sites that are out there.
So let me ask you this, like, why have we seen so many non-QN companies go under over the past 12 months, and you guys have been able to maintain, a certain level of like sufficiency? Like, how have you done something where other companies have failed? And I've never asked you that before, but I think that's kind of a relevant question because a lot of lenders out there, they want to know these answers.
I don't want to I'm not going to stand on anybody else's gravesite and say, hey, we're so much better than anybody else. We are very blessed. We've been very much, we tried to be proactively responsible in the way in which we were lending. We've been what they call laddering forwards, as you would ladder bonds. We've been laddering forwards since September of 2021. When the Fed started to talk about raising rates. That's not to say that we've been unscathed. We have had trades ripped up. We've had many, many losses. We've been very fortunate with our lending partners, the people who provide us with liquidity, to how we worked out some deals. We've been very fortunate with investors that we're working with now and have been working with. We have a $500 million forward on with a gigantic insurance company that's buying a large position of our loans right now because the securitization market's not great. They're a great partner of ours. We're very excited about that. And we've been very, very fortunate to be in the situation that we're in right now because we've been steady. Our underwriting has always been, my hat's off to the gentleman sitting in the room right next to me, Mr. Chase Buckner. He is our chief operating officer, and he keeps me in line when I go, hey, I think we should make this exception. And he'll give me 5 reasons why we shouldn't. and we're making good loans. I mean, at the end of the day, we keep our delinquencies low because we make good loans. We work with people that our broker partners are great. If there's ever an issue, they're always ready to help us. We didn't get stuck with a bunch of deals. I can speak to some of the rumors that I know about some of these other lenders, just that they are rumors, that they didn't do a great job of managing their positions, and they're kind of flying naked in the wind and hoping that rates were going to get better. And hope is not a hedge against anything. And that's why at times our rates have not been as competitive as some others in and out of the market with our forwards. We had to do that to be protective of not only the people that work here at Oaktree, but our broker community, because we want to make sure that when we tell you that we're going to write a loan, that you're not going to get burned by a real estate agent. You're not going to get burned by us. We're not going to burn you and then burn all of those people down the line, especially the homeowner and losing earnest money and things like that. But that's why I think, because we just do things differently. I don't like to stand on ceremony. I don't know. I wasn't there. I don't know why some of those other places have gone out of business. I can only tell you that the market did a complete 180, and I don't think anybody was expecting the velocity.
No,
and nor were we. Nor were we.
No, I mean it was fast. It was hard, but you don't stand on a velocity. Like, what a great line! Just what a great line! Like, you guys have always done like things the right way, and I think that's kind of cool.
We try to the best that we can. We want to choose the right as much as possible. So
how fun! How fun. So, hey, by the way, how are we doing right now?
We're cranking. We've got some stuff going. We launched our second mortgage program. I don't know if we talked about that or not. I guess we did a little bit with bank statement income.
Yeah.
We're going to raise the loan amounts up on that one. Going to go up to 450, half a million, somewhere in there. For second liens, we're increasing our exposure there to, I think, 2.5 million total exposure. So
Okay. I like
that's
that.
going to help out. This message is from me to all of my broker partners out there that have done loans with us in the last 12, 24 months. Our average loan size was $700,000+. There was a lot of $1 million loans in there. Call those people. They have
Yep.
equity. They still have equity from when you refied them the last time or when they bought their house. As long as they've been in their house 6 months, 90% cash out, 1 year of income documentation, or we can do bank statements up to 85%. We can do investment properties up to 85%. So if you're looking, is now the time to buy? Absolutely.
Totally.
Why is it now the time? Why is now the time to buy? Well, we just talked about it. The peak of the market was up here. Now you can negotiate a price somewhere down here.
It's so funny, Chris. You say that like I'm like, so that's my show for tomorrow. It's like, well, is now the time to buy a house? And the answer is emphatically yes. If you look
Yep.
at Fred, the St. Louis Federal Reserve, and you look at home prices from 1960 till now, all they've done is gone progressively higher and higher. Like, so
Yep.
is it a good time to buy a house? Yes. As a realtor or a lender, you need to be talking with your clients right now and say, buy a house today, because I guarantee you it's going to go up tomorrow.
I was talking to my buddy, well, you know him too, Eric Bolby,
Oh, yeah.
the CEO of AmeriFirst, and we were just talking about the market in general. And I definitely 100% stole his story that we were talking about. But it is a great point. If you're a real estate agent and you're showing people houses and you're encouraging people that now's the time to buy a house and rates are 2 and 3%, well, you're encouraging people to buy a house at the top of the market. Now that rates are lower again, or now that the rates are higher and home prices have come down, you can now take your customers to go buy houses on discount. What's
Right.
when rates were 2 or 3%? How many times did you hear? I had to waive my appraisal contingent. I had to waive my inspection contingency. I had to waive everything. Right, my
Yep.
earnest money was hard the next day. Basically, I had no time to inspect the property. I mean, it's crazy. So, like, how many people got into the house and then immediately had to go and put 50 grand into repairing the house because they found that the
All day
hot
long.
water heater was bad, or
Yep.
the roof was leaking, or whatever the case might be. The foundation was cracked. Any of those things. There's none of that. Now you can buy a house. You can get a home inspection done. You can get an appraisal done. You can negotiate on price. There's not 7 offers in on that same piece of property at the same time. I mean,
Yeah.
it's a different market. It's a different environment. And now's the time. If you're a real estate agent, get your customer qualified. We provide Oaktree and our broker partners are able to get access to our income calculation tools. You can send in your 12 months of income documentation, or 24 months, whatever it is, bank statements, tax returns, and we can calculate your income. We'll tell you exactly what the income is. You get the matrix. Your AE can help you determine LTV, FICO score maximum. We can do pre full written pre-qualifications for you guys. You can go out. You can know you've got a qualified borrower as long as they've got the earnest money that we in the bank. And we're happy to do that. Not any better time in the history that we've been here at Oaktree has it been to buy a house when that this is worth. Could it drop a couple more percent? Sure. That's why I disagree with your statement. It's not going to get 08 crazy. It's not going to. But if you can buy a house at a discount now, and you're in and you're comfortable with the payment, in 12 or 18 or 24 months, once rates moderate back down to the 4 or 5% range, right? What's going to happen? Well, you can either do one of 3 things. You can refi, cash out, put that money back in your pocket, whatever down payment that you put in, right?
Yep.
And then you still have probably roughly the same payment you do today. You can sell your house, pocket the profit, or you can refinance it and get a lower rate, and then you have even lower payment. You can maybe do a 15-year term, depending upon how low rates go at that point. So
yeah, it's kind of a fool's game. I mean, it really is. If you're in this long enough, like, just buying a house is always going to be a good idea. It's been proven to be true. And I'll tell you that right now, like, for a loan officer or a real estate agent, having a non-QN company like Oaktree in your pocket, who is there to help you with, and I've done the math on this one before, like, your average self-employed person makes twice as much as their average employed person, if you want to double your income or your opportunities, go look at self-employed people, look at the bank statement loans, look at the DSCR loans, like look at everything that our non-QM companies are doing right now. They do such a great job. Chris, honestly, it was kind of a layup for me. I mean, but what a wonderful conversation. Thank you so much.
Thanks, brother. Anytime.
All right, man. We'll talk soon.